Hello, guys. Welcome to the second episode of the Trader Podcast. And today I'm here with my assistant Jimmy. So in this episode, we're gonna mainly focus on about experienced trader versus a beginner trader. So Jimmy has been trading about almost a year now. He started with about 27,000, 28,000 in his account. And as you guys know me, I've been trading for about 7 to 8 years now. Back in 2016, 2017, I started with 27,000, and then I turned it into at least $10 million. I can't say the exact number, but definitely over 8 figures. So right here, I want you guys to kind of pay attention to his mindset and my mindset, so you can take both lessons whenever you are in different trading stages. So from here, I will let Jimmy take it, and he will share a little bit about his experience in the last year of trading.
All right. My name is Jimmy. Not a very good day trader. That's my first label. As Steven mentioned, I started trading last January, and it has been a year now. At the first couple months, it was really rough, and I was constantly facing the possibility that I could blow out my account any day I wake up. Maybe I'm not thinking straight in the morning, or I just woke up late or woke up too early trading in the pre-market. Like many other day trader who just started their trading journey, I have a lot of misconceptions about trading. I always thought, it was really messy at the beginning, because I always think that I can go like all into a very regular trade, and then I end up losing big on something. And right now my progress in day trading is I'm down like 6K, from the very beginning. Overall down 6K. First 6 months I was down about 8,000, and later there was a month last October, which is the really very crazy month. I took another approach. The approach was I was just gonna follow you strictly, and I'm not gonna trade on myself. And that month I was up 22K. And later when I switched to kind of a half and half, whenever you have a trade, I'll follow it, and whenever I trade, I'll just trade on my own. I still lose money that way, even though I'm winning on the following trade.
So here comes one question, as you guys are watching the podcast. So you're a person that really close to Steven, and you're pretty much beside him all the time. So why not just follow him pretty much 100% of the time, and you'll be able to make at least 6 figures a year with your account size?
That's a very viable question, because in my mind, after so many trades that I pull off on my own, I just start to ask myself, okay, I think the most efficient way to treat this stock market is actually to follow every single one of your trade and not doing it on my own, because
See, this is another question that other people will be curious about, is that before they go into day trading, they will look at the statistics. 94% people loses money in the stock market, and I think I told you guys in the last podcast, only maybe 5 people can make over $5 million per year in the entire, I would say, brokerage, which has about 25,000 people. And 3 out of those 5 people keeps rotating out because they blow up in maybe some tickers like DWC. So once they know the statistics, right, and they see somebody like me, and you're really close to me, so you don't even have to go through making so many trades by yourself. Other people just be looking at me, says, okay, I'm just gonna follow Steven from the beginning. I'm not even gonna trade by myself. So what's your take?
My take on that is I just had an idea popped up towards that topic, because my take on that is, if I do that, I know I can be profitable because the statistics tells me so. But if I do that, I'm worried. I'm worrying about like someday I may not be able to follow your trade, and then this may not be a very consistent path for me to take on. But then I was like, if I trade on my own, that's not consistent at all either. So if I just maybe the following part is actually the learning part that I should be taking on instead of like just trading on my own.
So one of the things I would say as a more logical way is if Jimmy tends to follow me from the very beginning and he turns 27,000 into 6-figure plus, and his main focus is to be consistent profitable without me being present. So that takes trades by himself and takes practices as well. So if I'm not there and he has a 6-figure account, once he makes a mistake, that will be a much severe mistake, on a 6-figure account instead of a $27,000 account. So if I present that way, it's much better to make mistakes when you have a smaller account than you have a bigger account. That's my take. Yeah,
I agree. And I just have something in my head. And I think the following trade part is not only about when we have a trade. It's also about how much position size you should be putting in after you took a loss, after your account gets decreased to a point, and what's the new ratio of you putting into that account. I think when I'm not following you, when I'm not following your trade, what I do is, okay, on the first day, say I lose about 5K on a 1/5 or 1/3 position size, and the second day I will think about making it back, or third day whenever there's a opportunity, and I'll go in the same size and I'll lose it again and again and again until my account is non-existent. And but actually the right way to treat that situation from your perspective, if you are to treat my account instead of me, I think it'll turn out really differently ever since the first losing trade.
So there is more of like a derivative about whenever you're on a losing streak, that every loss you take, and if it turns out become a consistent loss, then you have to slowly reduce your size. And for somebody that follow me 100% of the time, and they are looking at me trading different tickers, that's fine, and they can look at my entries and exit. But the one thing that they can't pay attention to is my size, because I have my own idea about my sizing into different winning percentage pattern. Some tickers I size in $2 million, some tickers I size in only 300,000. And for somebody as a beginner like him, all those numbers are so big that he rarely pays attention to. So if he cannot control the size in different pattern, which is a big problem. So if I throw a $300,000 into a ticker that's not very profitable, only maybe 65% winning percentage, if I take a loss, it will be relatively small. And if I throw a $2 million on a ticker that has 80%, 90% winning percentage, if I make a win, that'll be huge. The win will overwhelm the losses easily. But for somebody like him, he doesn't know the sizing difference. He doesn't know the statistics behind different patterns and winning percentages. He will throw all of the size with he will throw, I would say, the same size on all different tickers. So that will become a whole different story, because you don't really know how to sizing heavy into different winning percentage pattern. And that will basically come out with a completely outcome between me and him.
Complete different, yeah. Yeah, I noticed that when I was going through your trades from Trade Zero last year, there's it's the share sizes, they vary a lot, and it seems like you control it very well, because out of like, because I do it like in a month-to-month increment. Say last October, the trade you pull off last October, you only have 2 losing trade, and then out of, let's say, I think it was like 12 trades on trade zero, and then you only have 2 losing trade. One is like $700 loss, and one is like 200K loss or 100K something. But the winning trades are, on average, the biggest one goes up to 900K. That's just the trade zero account. And then average is around 500 to 300K per trade. And that part to me is like, I'm super amazed, because you control your losses here, like that portion, 100K or 200K, that's your max loss there that you took. And then the average win that you took is, I would say, even 100K more than your max loss. And when I look at the position size, it's really, it is really hard for me to follow, since the share size is just really big. And I wonder if the best way for me to start practicing this is from what I'm doing right now, which is I will break down my position size to the small, let's say 60% winning rate to 75% winning rate. I'll put down 1/5 of my account, and 80 anywhere about 80% winning rate, I would go about 1/3 of my total equity. Do you think I should break it down even more than the 2 position size?
So that's something. See, here is the most difficult part for sizing in. Is there's a limitation about how much you can size in with different account size. So let's say you only have a few $1,000 account. You can size in with percentages, 1/5, 1/3. If you have a $50,000 account, you can still size in 1/5, 1/3. And if you have a $500,000 account, you have to really pay attention to the volume, and there's only specific amount of money you can size in before you break the pattern. So that's number one. You have to go figure that one out as you become more experienced trader. The second part is being flexible with your account going back and forth. So with day trading, right, you experience exponential growth within a small amount of time. And one day your account is 27,000, one day your account is 54,000. And the transition from 27 to 54 is you are not very experienced with the losses. You are not very experienced. If you size in 1/3, your max loss will be this much. When you see that loss, you see, oh, this exceeded my normal losses on a $27,000 account, and you instantly freak out and you cut your losses, but you are not supposed to cut your losses. So those mental transitions is also very important for your trading career. So being adaptive on your account sizes and being adaptive on size limitations once you become more experienced, those two, I think, are the most also difficult part for you to experience. I can't really teach people that because every day your account just going back and forth, back and forth. I think at one point of my time, my account was going from 1.5 million to low as 700K. It was just going back and forth like that. So I couldn't control my size. When I was at 1.5, sizing in 500K is easy. But when I have a 700K account, sizing in 500K, that's almost all in.
Yeah, that's tough. How do you manage it?
So to manage that, and whenever you are making a trading plan, it is fine to make a trading plan whenever it's in a pre-market, but pretty much all of the entry is like instant. So you have to make your decisions within 30 seconds, right? In those 30 seconds, you gotta think about all of those risk management, make sure it's set in the right size, and make sure you have a correct risk, and make sure you have the correct max loss, and be able to cut once the stock reaches a certain point. So all of that information has to go through your head within 30 seconds. So that's the hard part. It's very easy to screw up on, thinking through those 30 seconds. I've done it many times. Sometimes I press an extra zero. Sometimes I didn't know my loss could get to this big. And that specific part for you is, I would say, to be going from, thinking fast and almost feel like it's I would say it becomes an autopilot after you do like 100 times. But for the first 50 times, it's very difficult. So to control that is also very difficult. You're gonna go through some crazy losses at the beginning, which I did at the beginning, and you learn from that. I think the most important lesson, no matter how I tell people what they should do, what they should not do, and those type of thinking process produces mistakes, and you gotta experience those mistakes before you become a better trader.
So knowing what's it like when you mess up,
knowing what's it like when you mess up, yeah.
And being confident that, okay, if I mess up, this is what could potentially happen. Even though I could avoid it, I still know what it's like in the back of my head. And moving forward, I'm still digesting on the part. How do you how fast you calculate the position size and the potential risk that you're taking for each and different position, for each and different pattern which you size in differently.
So what you should do is you should write you should treat different patterns like a branch. So you look at the ticker, okay, this fits certain criteria. Maybe it's a bound short, gap up short, or recent gap down, or first right day, or whatever. It fits a certain criteria, and you branch out from this pattern, and you see, okay, how much reward do I have? How much risk do I have? Is it really worth it to go in today? And is it overextended? So the stock itself, overextension, volume, size, flow, market cap, all those things matters. And that just takes a massive amount of experience, because different ticker has its own volume, market cap, flow, and to control size on individual ticker that's completely different than all of the samples that you have is difficult. So when you see me making a trade like DWC and AMC and GME, I've never seen those before.
Yeah, how did you figure out a new position size for those?
So that comes down to for AMC and GME. GME is reasonable because once it dropped from 500 to 100 and bounced back to 400, that's a massive bouncing percentages, and you have a solid risk for your shorting too. That's the same pattern as CEI, so that's easy. Now for AMC, when it dropped like that, for AMC, that was difficult. AMC, I don't think I did very, very well compared to GME. Yeah, AMC was, it dropped in the pre-market, and I did not expect the AMC bouncing all the way back and almost to the exact same high as I think it was the $75 area. Now to control size on that one is almost like trading a $1 billion cap. So you know that when most of the $1 billion cap has its fundamentals, so massive extensions or massive panic will have a reverse. Typically, when it drops 75%, it reverses about 50% from the bottom. So Now for AMC and GME, since they're so extended, I was unsure they would actually have a bouncing. Yeah. So for AMC, I did not catch the bounce. For GME, I packed size on it because I have identified risk. For DWC, the first size was small, but the rest of the size, once the pattern was formed already, I will be able to identify the pattern that's going to play out. So that's why I sized the heavy. So that 178, 165 entry at the very top, that was like a more gut feeling. Yeah. That was DWC. AMC, that was a solid trade. No, GME was a solid trade. AMC, I would say, yeah, it comes with gut feeling. Once it drops the certain amount of percentages and I can confirm the panic is coming, that's where I sized in.
That's where you drop the size.
Yeah. So you can see.
So going back to the drop, the sizing in after you confirmed it's a drop, because it sounds like you broke your position size down by first very little and then large portion once you're confirmed on a certain idea. How do you break that down?
How do you break it down?
Let's say to give it a percentage, what would be 1/5, 1/3 of the total position for your first entry?
Normally I don't really break it down that much. I will size it in based on how I want to look at my average. What average am I most comfortable at when the stock is at a certain point? So let's say for AMC, that top is 75. My average better be at 65 or something, right? So I will size in a little bit amount, more of like this might be the potential momentum shift because it's up so much. Once it confirmed drops, it drops about 61, 62, right? I sized in somewhere between 70, and I average those positions. Together, my average will be around 67, 68. So I'm sitting there, 67, 68. I'm very comfortable with the stock is already at 61 and closing to the 50s. Yeah. And when it drops all the way down to 30s, I feel much more comfortable. So you have to kind of see that the stock current price with your current average. If the gap is too small, that's where it makes you nervous. So you kind of have to find that comfort zone. Is you want to size it in a small amount to drag your average up to have the middle point that to compare with the current price. That gap is your edge. The bigger the gap is, the more likely you are going to profit, especially on a stock is on a down, shifting momentums. So.
Yeah, that's very interesting to me because for lately what I'm trying to do is just one entry and one exit. I've always had this question on if you break your position size down by the first it would be like a very high entry, and then the second, once the confirmation about something, once you confirm that this stock is cracking, and then you can still size in with the previous entry to drag your average up. What kind of, you said the larger the gap from your initial entry and then the second confirmation, it's when it gets bigger, how is your edge increasing?
On a downshift momentum is when the stock being so overextended, going up 1,000%, and when it's on a confirmed downshifting momentum, it will drop at least 50% from the top. So from that point is how close are you from the top on a $1 billion cap. So that's the trick. Now for all the momentum shift tickers like DWC, AMC, and GME, KODK, all the crazy tickers that happened this year, those you need adding. Like you need multiple entries. But for regular patterns like gap up short, bound short, you don't really need multiple entries. One entry, one exit. And a lot of people cannot control their entry based on multiple entries on a ticker, especially on a multi-day order going really crazy. That's where they blow up their account. So that's why I recommend that most beginners don't do try to guess where the momentum is going to shift, because if you cannot control your sizing, very, very easy to lose 20-30% in one candle. So yeah, that's my take on the momentum shift and the regular patterns.
Okay, so regular pattern, it will be one entry, one exit, get it cleared. And for momentum shift, you have to size in differently at different points. Would you go about 1/2 at the first entry and 1/2 at the second entry?
1/2 and one. See, that's not very ideal, because whenever you decide to do 1/2, you're pretty sure that the stock is gonna go down from there. So, personally for me, I would drop a little bit size to test. Yeah, I would test the stock to see the strength of my shares. That sounds a little bit weird, is that I will go in and use my size to test the stock. So I put in 10,000 shares, I put in 5,000 shares to see how far the stock will actually drop. If it drops a significant amount, that makes, first of all, if it is really on low liquidity, the stock would pull really hard. If it pulls really, really hard, that means there's not many buyers are in there anymore. If there's sufficient enough liquidity, and if you drop 10,000 shares on it, depends on the stock price for sure. But if you drop 10,000 shares on it and you didn't really move, or it pulled down a little bit and instantly reversed, and that's something that shows the stock is still have a lot of strength. So I'll go in and test about a few times to see how my size will actually affect on the stock before I go in full size. So for me, I'm more of looking at the bigger picture. If I can make 700,000, 900,000, or $1 million trade, go testing size losing 10,000, 20,000, it's nothing. No.
Yeah, that sounds hard, first of all. But the second is, how did you start practicing, like looking at, because this is really hard to quantify. You can't really bring up Excel sheet and record what you're doing when you're testing all those shares. So I guess it's all based on your feelings, and then how basically if I put 50K shares down here and then seeing how much it'll drop here.
See, that it's quantifiable. See,
in your head.
It's quantifiable in my head, yes,
Yeah.
but it's also quantifiable on the machine, but just it's not more difficult.
Yeah.
Because whenever you are seeing so many examples, you can see how far the stock will actually pull based on different flow and market cap. And you see so many of them, you can see what's the percentage you can pull. But to really actually track that with your 8-9 years experience, to track every single one of that, it's a little bit difficult. So I don't think anybody has that type of spreadsheets that certain amount of size can pull certain percentage on a stock, and what type of percentage is considered to be weird, what is considered to be likely reversible based on how much size you tested. Like, I don't think none of them has that. Maybe it's one of the stock gods out there.
Yeah. I don't even know how to like practice that. It's like, when did you start noticing that this could be a method to test the liquidity?
That point started with I was sizing into a ticker. I was wondering, okay, well, the stock is up about 100%. How much can I size in? I was pushing size. I was making 100K, 80K. At the beginning, I was making 20K, then 80K, then 100K on a ticker. And it gets to a point that you size in so much, and it's not worth it no more. It's not worth it for a stock that's only 100%. You'll get to a limit of this size is not worth it for the stock right now. You have to drop size because your risk become too much. So that's number one. After that, I started to notice, okay, how much size can I use to test the stock, to actually fit my own size into the pool before somebody uses a large amount of dollar to counter me because I shorted too much. So it started from there, and I'm still learning. I don't think I am there yet, but I have a feeling that, not a feeling, but I have some type of statistics behind it. It's quantifiable, but it's very difficult.
Yeah, that sounds really tough. Yeah, that sounds. I don't know how to do it, and I don't know how to start to practice that until at first I feel like I need to get to a certain point in my account size, and to actually have an effect when, like, say you've shorted 50K shares to test the liquidity. But 50K shares is like everything to me right now. So
at this point, you don't have to worry about that. All you have to focus on is patterns, right entry, right exit, maximum your entry, maximize your percentage on a chart. At the beginning, I was just trying to practice. Okay, today I missed about 10% from the entry. I should top take it, and I also should bottom take it. There's a statistics for top tick and bottom tick. Like whenever you top tick, you will know how far the stock will drop. Like every time I told you that the stock is likely to drop to here. If the volume is too much, you can cover a little bit above there. All those cover experience or exiting experience come from statistics. It come from all those experiences. So from trading, once you, at the beginning, I'll say at the first 2 to 3 years, if you just practice your entry and maximize your profit on the exit, you should be good to go. Yeah, that's once you practice the point. I would say I give a 0 to 100. If you got to 90 on the total score, you can make $1 million a year.
I have been doing none of that. I need to. I actually, can I find a pen? I actually want to write this down because, I haven't been tracking how good my entry and exit is from the most ideal point on each of the different pattern. I haven't been doing that at all.
Yeah, you have to do that.
Yeah, I need to do that, right? Yeah. All right, which brings us to the next question. This is, when I'm having an issue in day trading, it's pretty easy for me to go to you and have it fixed. I'll go ask you questions, and then you'll point out what am I doing wrong, what am I doing right. But you started trading on your own, and then you pretty much it's a self-learned process for you. And I wonder, it's easy for me to keep myself humble because I can go to you. I have some place to look at. But how do you keep yourself like in check and humbled, and in whichever way you would define a good trader? How do you keep yourself in check? Because
that's the hard part. I used to be trying to figure stuff by myself. Now looking at all different people's stuff, all the bigger traders or bigger name traders or major traders out there. I will test their strategies and we'll see if they work or not. But from self-improving part, it is so much more difficult. I have to do so many trades and simulations and to see where could I fit in and how to dodge losses and how to have the correct mindset every time when I take a loss. Now that's the hardest part, because if you're alone, you're unsure of what you did wrong, what you did right, until you trade for maybe 10 months a year or 10 months and to a year, and you look at your entire trading you look at all your trades from your trading you look at all your trades from account statements, and you'll be able to figure it out. Okay, this is the biggest loss I have. I probably should get rid of that one, and I should also look at this ticker. Maybe this one is a little bit extra. This is from over trading, or this is from revenge trading. You take those out, and you will be able to recognize which one's avoidable, which one's not avoidable. You can simulate another sheets, and you can see, oh, this is have much more better result than I have. Let's do that next time, and it just slowly improves every single year. So that's how you self improve.
So you pull out your account statements, and then you find out the consistent trade, and then you actually simulate them, and you put those trades into a new spreadsheet, and then just the new spreadsheet has nothing but the ideal trade that you bought.
Ideal trade that you pull up, and the losses that you think it's unavoidable.
Okay.
Then you look at your profits, and you look at your profits right now, and you can see, oh, I fucked up.
So you actually build this ideal in your head, and then you go for it. Yeah. And then until you get there, you figure out another ideal that you can go for again. Yeah. And that's the way you. Yeah. That sounds tough. I still want to write it down.
Alright guys, that's enough trading topics for today. So if you have any questions or any comments about Jimmy and questions to ask me, leave a comment below and we'll be happy to answer. And hopefully in 2022 you guys will have a great trading journey, and let us know. I'll see you guys in the next one.